Hey everybody out there in YouTube land, Kimosabi here. We're going to give you an update on an Elliott Wave count, kind of the way I'm counting it for now. This is the 4-hour chart. I'm going to be counting from the low in August and how I'm kind of looking at the wave at the moment. I'm currently counting off the low in August as a leading diagonal. It doesn't look too bad, and the measurements work out really well for that to be a leading diagonal. So I'll take a trend-based fib extension to measure all of these 5 waves together. Very shallow wave 2. And that gets wave 3 at a 1.618, just a little bit beyond it. So the wave 5 target should be around 131, maybe 130, 128. Maybe it comes a little shy of that. And then you would have the larger degree count being counted as a 1, 2, up here for 3. Currently working on a wave 4. I suspect that this is the first leg of wave 4, so that might chop around in this area, ultimately making it down to wave 4 of lesser degree, which is in this little vicinity between 85 and 87,000, before eventually making progress up to wave 5 to complete the sequence. Now, depending on how it gets up there, that could end the sequence. However, it is also possible to have a very extended 5th wave that gets you very, very extended up to 170,000 or something like that. It would essentially be a repeat of all of this, just more parabolic. But to stay conservative and make sure to take profits, we would expect the lower target to be hit first. Once that gets hit, then you can reassess, but you don't want to necessarily aim for the moon. You need to expect it may just stay in your backyard. And just to confirm what I'm kind of looking at inside of wave 3, because you can count 5 waves and each one of the impulses up. As we counted the leading diagonal with 5 waves, we'll count wave 3 having 5 waves as well. Labeled like this: wave 1, 2, this would be 3, this would be your wave 4, and this is an ending diagonal, wave 5, consisting of 3 waves throughout: ABC up, ABC down, ABC up, ABC down, ABC back up. So that works for an ending diagonal structure. It's an expanding diagonal structure, but it works perfectly. So based upon that idea, we can find trade setups and kind of what to expect, the potential for what to expect. So I will take a trend-based, or not a trend-based, the Fibonacci retracement from wave 2, bring it all the way up to the top of wave 3, and we get our retracements. Currently hovering around the 382 Fibonacci retrace, which is 92,000. Somewhere in this vicinity, you should get a bounce, most likely, and eventually end up at the 0.5 Fibonacci retrace at 87,533. Now, price can just come down from here and touch the 0.5 Fib retrace, which I think would be a buy setup. And what would happen if price is coming all the way down to the 0.5 Fib retrace, then this may play out a triangle wave 4 before breaking to the upside. But I don't count on a triangle happening because I'm expecting higher prices. So I'm kind of expecting this to be some kind of A and B. B might be done. B may take the liquidity first and then go up for a C leg, only to retrace back down to come and hit that 0.5 Fibonacci, which would be like an A, some kind of wave 4, which I think you'd have a sell set up at previous resistance, acting as resistance again for your B wave, to then come down for the C leg, or WXY, whatever it wants to be. And maybe that gets you around your cycle low in January. That would be ideal. And like I was saying, if price comes down now to the 0.5 fib retrace instead of doing it later, I would expect this to be some kind of triangle that plays out, meeting previous resistance again, then previous support would act as support, and that would be your wave 4, some kind of triangle. If a triangle is done, it is very likely that price shoots up, grabs liquidity at the target, and eventually retraces back to take the lower liquidity later on in the cycle if you get that type of price action. Something else that could be happening is your triangle is going to be kind of where we're at now. It's the opposite. Make it that as a triangle here, and then you're getting an A. That would be B, and then a straight drop for C. Something like that. You never know what kind of pattern you're going to get, so keep your stop losses at your invalidations. Don't move them. This price action can be very confusing, as it normally is in a wave 4. There's really any number of things that could come out of here. I mean, from this price action, you could even break above your high, come in there, break above, and then back down, like I suggested in the last video, and have an expanded flat wave 4. That's also potential for maximum liquidity, and that would be the market maker that is just balancing his book, bringing price down, back up, back down, clearing the liquidity, and then chop sideways before continuation up. But ultimately, before any major resumption to the upside, I am expecting 87.55 or 530 wave 4 of lesser degree to get hit. It may hit it to the tick on that wick to the left there. It may go right to that wick. It often does. So watch for a bounce there at 87.5. It might be quick and short-lived, and then look for an uptrend to start out of there. If you want a knife catch, your stop loss has to be way down at 73,000, because invalidation of wave 4 is at the top of wave 1. So your wave 4 can come almost all the way down there and still be pretty valid. You can go down to 77 and it's still a valid wave 4. It just wouldn't look as pretty. All right, let's zoom into the 1 hour chart here. I did turn the volume on, and thinking about some Wyckoff analysis here and price action in relation to the volume. And usually in Wyckoff, you would have like a markdown channel here, but we could do it with a trend line. You see that you broke above the trend line and you've been kind of grinding down it since the breakout. I was hoping for a buy setup since it did close higher here. So I wanted to buy previous support over here, kind of where currently price is. And that offered a bounce yesterday and then got stopped out of the rest of the position. So now I kind of want to wait for a higher high, because this looks like it can keep coming down. But locally, you see all the volume there is coming in at the bottom. So you could have a preliminary support here. This will be your selling climax. You see your volume spikes there. Automatic reaction, and this is your secondary test. This may come up, grab liquidity up here at around 98, maybe a little higher, and then come down and break these lows. I don't think the market wants to rally up that high until it takes out these lows. It's kind of what it looks like to me, which is why I think we're doing some kind of B wave down to take those lows, which I could draw that out. But the volume is coming in at the lows. So somebody is buying here, but eventually they may do a spring. And I like to draw a box around price action, kind of just let you know you have a range going on right here locally on lower time frames. And then the target for a breakdown would be the height of the range extended down below. So we could do that with the trend line. Just a rough measurement of the range. And if it were to break down, could go down to 85, 86,000 would kind of be the target. And that would be your spring phase. So this could come down and do the spring right now. So then you'd have preliminary support, selling climax, automatic reaction into a series of tests and just grinding down and then into a spring, and then it bounces back up. So that would actually be a very nice Wyckoff setup if price was to go down from here down to 86, 87, bounce back up, reclaim support. You expect support to act as support again, so this may bounce back up to 98, then come back down to 92 to check it as support before continuing up. And that might be a really good reaccumulation range for wave 5 that could come thereafter in the Elliott Wave format. But that spring can come way over here. Price can bounce, come back all the way up in here, then sharply move down, and then bounce. So that's kind of the areas that I'm definitely looking for. Kind of looking for a bounce out of here somewhere, but it may sweep the lows first and then bounce up before coming down to the 87 to 85,000. Currently, price action is just kind of looking like it's grinding down here. That kind of matches that. That one matches that. And then you got to pop up. From after the pop up, since you have this as like an ABC, this may repeat like this to take the low before any bounce. That's kind of what makes sense based on the way it's grinding down. The market isn't chasing the price up. And this is what it does during an accumulation phase, is they just set their orders at the lows and they're just filling their orders. Like there was an order that was filled here for, I think it was 1,000 Bitcoin or something like that. And same thing over here. There's 1,000 Bitcoin bought. And they're not chasing the price yet. They're just letting their orders fill and smacking the price down. You think they're buying hundreds of Bitcoin at the lows, they have the Bitcoin to smack it down because they're only smacking it down at like 5 Bitcoin or something like that. So they have the Bitcoin to smack price down, so don't think that this won't break down very easily. Don't think that they won't just buy it up, grab liquidity, then smack it back down. They have the liquidity to both buy it up and to sell it off very, very quickly. They just want to fill their orders. And there's plenty of liquidity over here. There's plenty of liquidity up here. And all of these peaks, they all have stop losses for liquidity. They could also bring price up just to get people and traders very bullish. And that brings a lot more stop losses down here. And then they take them all out at once before reversing. And to wrap things up, let's zoom out to the daily here and mark off some levels. And notice some key things here. We have a series of higher highs and higher lows throughout, very bullish, until Sunday evening that closed lower than that close. So that means you should be on the lookout for a lower high to come in somewhere around the 103 just based on that. So let's mark off some levels. We have this wick right here. And that is probably a tradable wick. We'll mark that off, 50% of that wick. I'm not going to measure it now, but you can certainly measure it. But it comes in at 101,500 roughly. And let's mark off this fair value gap up here between those wicks, that wick and that wick. There's a fair value gap up there on the daily. Area to pay attention to. And we had another one down here, this between this wick and this wick, and actually almost filled entirely. And that was a sell setup. Something I'm just noticing now on current price action is that big green wick from last Friday. We can mark that off as well. The entire wick, and treat that like a gap. And what we'd like to see is more trading in the upper portion to suggest that the buyers are strong. What we're seeing here is these buyers are not so strong. This price is able to come down and play around in here, and it's closing candles down in the lower half of that wick. So that's showing that there's not aggressive buying here. It's more of a passive bids getting filled, and maybe they come back up for liquidity before getting some more aggressive bids down lower. But just something that I'm looking at here. This is not very strong price action at the moment. Yeah, shorts would be warranted up in these areas up here, only because you did close a lower low, then you could expect a lower high, and your stop loss, find a reasonable stop loss. But ultimately, at the all-time highs, you wouldn't want to see that traded above. But I would think that we would find resistance at the 101,000 if it gets up there, or even as high as the 103, which was previous resistance for here. Well, this is 102. No, that's 103. Yeah, somewhere around 103.5. Get in the bottom section of that fair value gap maybe, and take all the liquidity before heading back down. We are currently in the holiday season, so you'd have less trading volume. So illiquid markets, these markets could move probably more than you would expect. So trade lightly, maybe, if you're not sure what's going on. Um, this can wreck you fast. This can drop down and pop right back up and then pop right back down and just liquidate people back and forth. Like I said, you'd never know what's going to happen in, like, after hitting a potential wave 3 and having a wave 4. They're choppy, confusing, and you need to walk lightly and take your profits when it offers them, I'd say, until we get down to wave 4 of lesser degree around the 87 to 85 range. Then I would say hold long if you get that bounce and expect higher prices. Maybe trim a little bit of profits and find somewhere to add back on. But in this range, I think we're going to be just choppy. Maybe we'll get a bounce on Tuesday, turnaround bounce, maybe after taking out these lows real quick, and it might pop up for the day tomorrow, and then have a Christmas sideways choppy something going on. Yeah, so that's my thoughts. I'm waiting for some closures, a 4-hour closure above 96, and then I stop loss at the low and kind of target the upper liquidity and see if it gives it. Not necessarily thinking we're going to break all-time highs this week. I think that might come after the next daily cycle low. Back in January into Trump's inauguration, so we'll see if that plays. So those were kind of all my thoughts all jumbled together with Elliott Wave, Wyckoff, trend, and just general ideas on the market. So hope that was helpful. Have a good night. Keep them stops tight.